In the next 15 minutes, I'm going to pull back the curtain on the silent forces converging on the crypto market. I'll reveal why the traditional financial system is teetering on the brink of a revolution, and how projects like XRP, HBAR, and XLM are not just tokens, but crucial pieces of a puzzle that will unlock unprecedented wealth for those who see it coming. This isn't just about price pumps, it's about a foundational shift in how the world moves money, manages assets, and secures its future. We're talking about a financial reset, a transfer of power, and a chance for you to position yourself for the biggest wealth creation event of our lifetime. But first, you need to understand the true scale of the storm. You've heard about inflation, right? The rising cost of everything, the feeling like your hard-earned dollars are buying less and less. But do you truly understand why? It all ties back to something called the M2 money supply. Think of the M2 money supply like a giant bathtub. When central banks pump more money into the system, literally creating it out of thin air, that bathtub overflows. More money chasing the same amount of goods means each dollar is worth less. It's like everyone suddenly has more water, but there's no more land. Now, historically, when the M2 supply swells, where does that extra money flow? Assets. Real estate, stocks, gold. But there's a new player on the block, one that's designed to absorb this influx of liquidity differently. The question isn't just if this money will seek out assets, but which assets will become the ultimate refuge when the dam truly breaks. And what happens to the dollar when the world decides it's no longer the safest harbor? Let's talk about the Federal Reserve, the puppet masters of the global economy. Their interest rate decisions are like the levers of a colossal machine. When interest rates are high, borrowing money is expensive. Businesses slow down, people hold on to their cash, and riskier investments, like crypto, tend to struggle. Why? Because you can get a decent return on a safe bond, so why take a chance on a volatile digital asset? But here's the kicker, the market is now screaming for rate cuts. Goldman Sachs, major traders, they're all forecasting significant cuts later this year, and into 2026. This isn't just speculation, it's an expectation baked into the very fabric of the financial system. We're likely talking about multiple rate cuts, potentially totaling 150 basis points or more by the end of 2025. What does that mean for you? When interest rates drop, the cost of borrowing plummets. Money becomes cheap. Suddenly, those safe bonds look a lot less attractive, and investors start looking for assets that can deliver real returns. Where do you think that money will go? Into risk-on assets. And crypto, with its unparalleled growth potential, is at the top of that list. This isn't a gamble, this is a highly predictable response to a known economic trigger. Think of the US dollar as the world's reserve currency, for decades, the king of the castle. But the king is getting weak. Very weak. We're seeing unprecedented government deficit spending, a mountain of debt, and the M2 money supply expanding at a rate that would make your head spin. This isn't sustainable. When confidence in a currency erodes, people don't want to hold it. They seek refuge in assets. We saw this play out in 2020 and 2021 when the M2 supply exploded, triggering a massive Bitcoin rally. We're on the cusp of a similar, if not more aggressive, expansion. The smart money isn't holding dollars, they're shuffling into assets. This isn't just about avoiding inflation, it's about preserving wealth in a world where traditional finance is showing deep cracks. So if the dollar's dominance is truly fading, and capital is rushing out of traditional systems, what kind of assets will truly benefit from this global exodus? And how do you ensure you're not left holding the bag as the old system crumbles? Enter XRP. For years, XRP has been a lightning rod of debate, but its core utility is undeniable. Imagine trying to send money across the world right now. It's slow, it's expensive, and it involves multiple banks acting as intermediaries, each taking a cut. It's like trying to cross a continent by riding a series of horse-drawn carriages. That's SWIFT, the old system. XRP is designed to be the high-speed express lane. It acts as a bridge currency, allowing financial institutions to send money globally in seconds, for fractions of a penny. No more waiting days, no more exorbitant fees, no more pre-funding accounts in exotic currencies. Think of it, a bank in New York wants to send money to a bank in Japan. Instead of using multiple intermediaries and days of waiting, they can instantly convert USD to XRP, send the XRP across the ledger, and then convert it to Japanese yen. All in a matter of seconds. This radically improves liquidity for financial institutions. With global trade increasing and the need for faster, cheaper cross-border payments exploding, XRP is positioned to become a fundamental rail of the new global financial system. But this is just one piece of the puzzle. What about the underlying infrastructure that powers these next-generation transactions? While XRP targets large financial institutions, XLM, or stellar lumens, focuses on a different, yet equally critical, demographic, the everyday person, especially in developing nations. Imagine millions of people around the world who are unbanked. They don't have access to traditional banking services. This means no easy way to send or receive money internationally, no way to participate in the global economy, and often, being exploited by expensive remittance services. XLM and the Stellar Network are building a decentralized financial infrastructure that empowers these individuals. It's like building a community bank that's accessible via a smartphone, allowing anyone to send money globally for incredibly low fees and near instantaneously. This isn't just a niche market, it's billions of people waiting to connect to the global economy. So while XRP is moving mountains of institutional money, XLM is enabling a groundswell of individual financial freedom. But as these networks grow, how will they handle the sheer volume of data and transactions without collapsing under their own weight? This is where a truly revolutionary technology comes into play, a technology that no one is truly prepared for. Traditional blockchains, as revolutionary as they are, face a fundamental challenge: scalability. Think of Bitcoin or Ethereum as single-lane roads. As more cars, transactions, try to use them, they get congested, slow, and expensive. This is why you sometimes see sky-high gas fees and long confirmation times. This simply won't work for global enterprise-level adoption. Companies like Google, IBM, and Dell, they demand speed, efficiency, and unwavering reliability. This is where HBAR and the Hedera hash graph truly shine. Unlike blockchains, Hedera doesn't use blocks or chains. It uses something called a hash graph, which is like a constantly self-organizing multi-lane highway where transactions can be processed in parallel. Imagine a swarm of bees building a hive. Each bee works independently, yet contributes to the overall structure seamlessly. That's hash graph. It allows for thousands of transactions per second, with near-instant finality, and military-grade security. It's not just faster, it's a fundamentally different architecture, one built for the scale and demands of the real world. This is the underlying technology that could truly handle the explosion of digital assets and transactions we're about to see. But what does this mean for the stability and security of these systems when real-world assets start migrating on-chain? We've talked about money moving, but what about everything else? Think about your house, your car, a piece of art, or even a share in a company. These are physical or traditional financial assets. Now, imagine if you could represent ownership of these assets as a digital token on a blockchain or a distributed ledger like Hedera. This is tokenization, and it's the next trillion-dollar wave that no one is prepared for. Why does this matter? Because it allows for fractional ownership, instant transferability, and global accessibility for assets that were once illiquid and difficult to trade. Want to sell 1% of your vacation home? You could in seconds, to anyone in the world. This is a massive leap in efficiency and liquidity for traditional markets. But as these real-world assets flow onto the digital rails of systems like HBAR, XRP, and XLM, how will we ensure regulatory compliance, legal certainty, and prevent chaos in this new interconnected financial landscape? This isn't just a technical challenge, it's a legal and societal one. For years, crypto has existed in a wild west, unregulated, untamed. But true institutional adoption, the kind that moves trillions of dollars, requires clarity. It requires regulations. And we're finally seeing that happen. From the MiCA framework in Europe to evolving discussions in the US, governments are starting to define how digital assets fit into existing legal structures. This might sound boring, but it's actually a massive catalyst. When the rules are clear, big players, institutions, corporations, even sovereign nations, can confidently enter the space. The gray areas shrink, and the pathway for mainstream integration opens up. This regulatory clarity is precisely what will allow tokenization to flourish in projects like XRP, HBAR, and XLM to truly realize their potential. The Wild West days are fading, paving the way for a more mature, legitimate, and ultimately, more valuable digital asset ecosystem. But what happens when the very infrastructure of these systems becomes so critical that entire nations depend on them? Beyond existing cryptocurrencies, there's another major force gathering momentum: central bank digital currencies, or CBDCs. Imagine a digital version of your country's fiat currency, issued and controlled by the central bank. It's like a digital dollar, a digital euro, a digital yuan. Many nations are actively researching or piloting CBDCs right now. Some see CBDCs as a threat to decentralized crypto, a way for governments to exert more control. But others see them as a bridge, a necessary step in digitizing the global financial system. The truth is, CBDCs will likely need underlying infrastructure that is fast, secure, and scalable. Could networks like HBAR and XLM be the very rails upon which these CBDCs run, quietly powering the future of national currencies? The implications are massive, not just for financial systems, but for privacy and individual sovereignty. And this leads us to the most critical, yet overlooked factor in this entire equation. While retail investors often focus on speculative price movements, the real long-term game in crypto is enterprise adoption. This is where the actual utility of these technologies is unleashed. Companies aren't just dabbling in crypto, they're integrating it into their core operations. Think supply chain management, carbon credit markets, secure data logging, and micropayments for IoT devices. This is where HBAR truly shines. Its hashgraph technology, with its speed, security, and proven scalability, is attracting major corporations. The Hedera Governing Council includes household names like Google, IBM, Dell, and Boeing. These aren't just investors, they are users building on the network, creating real-world demand and utility for HBAR. This isn't hype, it's a quiet industrial-scale revolution happening under the radar. When these massive enterprises start leveraging distributed ledger technology for their multi-billion-dollar operations, the demand for the underlying tokens that power these networks will skyrocket. This is why N01 is prepared for what's about to hit crypto, because the shift is happening at an enterprise level, quietly, systematically. We've talked about the big players, the established names. But there are new challengers, next-generation networks pushing the boundaries of what's possible. One such project is SUI. While not as widely known in the mainstream as XRP or HBAR, SUI represents a crucial evolution in blockchain technology, particularly in its approach to scalability and parallel execution. Imagine trying to run an entire digital economy on a single-lane road. That's many traditional blockchains. SUI, however, is designed to process multiple transactions simultaneously, like a hyper-efficient, multi-lane superhighway. This parallel execution means incredible speed and efficiency, especially for complex applications like gaming, DeFi, and NFTs. If the future of digital assets involves massive adoption and billions of daily transactions, then the underlying technology needs to keep up. SUI offers a glimpse into how future networks will handle this demand. But even with all this groundbreaking technology, there's one final piece that binds it all together, a force that dictates market sentiment and investor behavior, especially for those who are unprepared. Beneath all the technology, the macroeconomics, and the institutional adoption, lies the most powerful force in any market: human psychology. Fear and greed. The competitor transcript hinted at this. People get emotional during corrections, they panic sell. But the smart money, the prepared money, understands that these moments are opportunities. When everyone else is fearful, selling their assets at a discount, the prepared investor is buying. When everyone is gripped by greed, chasing the latest pump, the prepared investor is taking profits. No one is truly prepared for what's about to hit crypto if they let their emotions dictate their decisions. The ability to remain calm, to understand the underlying fundamentals, and to execute a long-term strategy amidst the noise is what separates the winners from the losers. This isn't just about making money, it's about mastering your own mind in the face of unprecedented financial change. We've charted the course of this impending financial revolution. We've seen the weakening dollar, the inevitable interest rate cuts, and the tsunami of liquidity heading for risk-on assets. We've explored how XRP is set to revolutionize cross-border payments, how XLM is empowering the unbanked, and how cutting-edge networks like SUI are pushing scalability to its limits. But at the heart of this transformation, providing the robust, enterprise-grade backbone for everything to come, is HBAR. Imagine a world where every major corporation uses the Hedera network to manage their supply chains, to issue digital assets, to power their IoT devices, to create new revenue streams. Think about the sheer volume of transactions, the unprecedented demand for the HBAR token that fuels it all. This isn't a theoretical future. It's being built now, with the world's biggest companies signing on. The market isn't just reacting to news. It's slowly, surely, waking up to the fundamental shift in global finance that HBAR and its peers represent. The final explosive move is coming, and it will be fueled by the realization that no one is prepared for what's about to hit crypto at this scale. This isn't a small wave, it's a global financial reformation. The information you've just received isn't just knowledge, it's power. The power to understand the forces shaping our financial future, and the power to position yourself ahead of the curve. You now know that no one is truly prepared for what's about to hit crypto unless they grasp these converging trends. This isn't just about getting rich quick, it's about participating in a paradigm shift, securing your financial future, and understanding the new landscape of wealth creation. The days of simply hoping for a pump are over. This is about deep understanding, strategic positioning, and unwavering conviction.